everyone. If you all could take your seats as soon as possible. We have here an illustrious panel led by Michael Turpin, who is one of the earliest adopters of crypto and one of the biggest investors in all of the blockchain industry. Michael is a founder of Transform Group, a leading advisory and PR firm in the blockchain industry. He's got over more than 300 clients to his credit, including Ethereum, Augur, Ripple, and Kraken. He also owns a blockchain accelerator in Hamilton, Bermuda, and he's a managing director of Transform Ventures, which invests in the DeFi and NFT sector. He's also part of a DeFi studio and a venture foundry. He also co-chairs a creation platform, and he's co-founder of BitAngels, the world's first angel network dedicated to digital assets. He's also involved in two other funds, one of which is an algorithmic trading fund, and the other is a digital currency fund. As well, he's the founder of the Caribbean Blockchain Association, which he founded with the incredible Roger Ver and also Gabriel Abed. Joining us from Puerto Rico, where he lives with his wife and two dogs, is Michael Turpin. Thank you for joining us, Michael.
Thank you. Actually, it's a little older buyer. We have one toy poodle. At any rate, and the algorithmic trading fund is called Trader Capital, and Michelangelo's in the group right in front of me. And then the digital currency fund is Alphabet, which is out of London. And any questions on that or anything else I have, please let me know afterwards. So definitely have a very fun panel here. It's having put on a number of conferences over the years. Transform Ventures has an events group. There's two conference series that have been going on since 2014. One of them just happened in Miami, which is where we launched Ethereum 8 years ago. It's called the North American Bitcoin Conference. And the other is Coin Agenda, which we're going to be putting on our 8th annual global show in November in Las Vegas. We also do one in the Caribbean. It'll be our, I think, 6th year, which is right after Art Basel. So everybody, goes and parties at Art Basel, and they come down and go to Puerto Rico Blockchain Week. And then we also have our 4th European one, which is we were fortunate enough to actually get the 3 days before the Formula One in Monaco. So we're jammed right between Monaco and the Cannes Film Festival. At any rate, so the reason I brought that up is that it's always tough to get family offices to crypto conferences, because a lot of times they really don't want to talk about family offices outside of a family office environment. Well, here we are at a family office environment, so we get to ask all the hard questions. So I'm going to start with the introductions, and then I'm going to, since a lot of the questions that people wanted to ask had some overlap, I'm going to sort of just throw it out to the floor. Actually, I find it much better if, let's see, so we'll start with Priscilla, thank you, Priscilla Cerniosa, who heads up strategic fundraising and management as the executive director of the Social Alpha Foundation. In that role, she led fundraising efforts in Asia for the University of Chicago Booth School of Business as part of their most recent $5 billion campaign. 20 years of experience in strategic consulting, corporate finance at little companies like Lehman Brothers, American Express, Warner Lambert, General Electric Capital. She has her bachelor's degree from Northeastern and MBA from prestigious University of Chicago Booth School of Business. I'm going to give everybody sort of bio in a row and then throw out some general questions. So Chris Hunter is co-founder of Galoy, a company behind Bitcoin Beach Wallet. You're the sort of fundamentalist we have on the panel for Bitcoin. So talking a lot about El Salvador, which again was a real, I think, landmark in the history of cryptocurrency to have a sovereign nation adopt Bitcoin as one of their currencies. Of course, they'd abandoned having their own central bank because they weren't very good at it, but there are another 20 or so countries that have the US dollar, which means they don't get to print anything and they get to be devalued by us. So hopefully there's more countries around who do that. Let's see. So mainly talking about, he's also, I can talk to him about the Lightning Network. Ask me about Lightning. So we'll have some conversations about that. It's got a shorter bio here. Alfie. So Alfie is actually why I'm here, because he's at a company called Canada that I'm an advisor to. The ecopreneur, formerly known as, this is kind of like Prince, formerly known as Alfie Ristom, has established himself. By the way, I have one of the events that was not in that most recent bio is we started doing these things called Satoshi Roundtable. Satoshi Roundtable is actually something I'm going to next weekend, which is it's sort of like the Bittenberg of Bitcoin. It's like the top 150 entrepreneurs in the world in Bitcoin that go to a secret location somewhere outside of the United States and kind of talk Bitcoin for a while. I'm one of only 3 people that's gone to all 8. But the Satoshi Salon is something I started in Miami this last week. We're going to try to roll it out to 100 cities that have interest in kind of investing in cryptocurrency, and then occasionally talking to startups. And it's going to be at a person's home, and they're going to get an NFT that allows them then to get to any Satoshi salon in the world. And Naples definitely would be on that list, I think, of the top 100. So anybody who wants to sort of be a host for the Naples Satoshi salon, come up to me afterwards. Let's see. The reason I mentioned this is because the first one in Los Angeles will be at Prince's former estate, which is a 38,000 square foot place in Bel Air the day before the Super Bowl. Anybody who's going to be there Super Bowl week, let me know and I'll get you an invitation. So Alfie's based in LA. I've been to his office. He's the award-winning author of the Bioman Chronicles and a leading expert in the fields of narrative design, screenwriting, game design, and IRL, in real life, social change. He has a full scholarship for his doctoral studies in quantum physics. Perhaps I'll ask him about some of those areas in terms of breaking Bitcoin. From the University of St. Andrews, the #1 university in the UK. We'll ask Oxford about that. And for the first 15 years of his career, Alfie held senior consulting and management roles in banking tech, and known for building world-class teams. Sent from my iPhone. Okay. Thought I'd read that. And then Sandra Thimile-Lufkin, okay, co-CIO and principal of her family office with her husband Chauncey. She's been investing in numerous venture funds as well as seed to growth equity stage companies in 3 areas. Main areas: blockchain, enterprise SaaS, and AI. In addition, Sandra is Chief Operating Officer at Hut Capital, a leading blockchain venture capital fund of funds, and a direct investment fund that provides exposure to the top blockchain and crypto startups globally via single commitment. Sandra's experience spans over 3 decades, including working with top private equity and venture managers, playing a pivotal role at another small company called BlackRock and their massive growth. She also was on the commodity and Forex trading floors of a little place like Merrill Lynch and Goldman Sachs. So we have a very prestigious panel. One thing in my bio, because it was a little bit older, that I sent, cobbler's kids don't have shoes, and I need to really update my bio on a few things. But part of Transform Ventures, which is a separate entity from Transform Group. Transform Group is the PR and marketing firm that I started many years ago, was the first in the crypto space. That's now kind of spun off and being run by very good people. I'm sort of just kind of overseeing it and doing some roll-ups underneath it. Really spend most of my time at Transform Ventures, which also includes Transform Capital, which is my family office, and overwhelmingly investing in DeFi, Metaverse, other crypto assets. And my lovely wife, who's still sleeping right now, heads up our real estate investments, is very good at it. So we're going to start with a couple of questions that appeared on everybody's list. How do family offices determine risk and reward in an area as new as cryptocurrency? Because it seemed like for a while it was just like, well, I heard about Bitcoin, but I'm not sure about it. So I'll start with the family office and tell us how you really came down this sort of path and where you are today.
Okay, well, for us, our journey began in 20. Well, for us, our journey began in 2014, and I have to
say it was a really it was hard to actually educate yourself. So we really reached out to a lot of our different friends. I have to say Cambridge Associates were very kind to us. So we sat down with both people who have now gone on to be in blockchain for 100% of the time. And there was another guy that was very pivotal for our education. So it was really starting with all education. It was still so new. No one really knew so much about it. And then my husband started to really invest in just what most family offices do, which is, the Bitcoin and Ethereum and opening of the wallets, and what a headache that was, and the agita that you have with the private keys, and whether you lose them and you're going to lose all of your assets. So, I mean, that was a big hurdle for, I think, family offices to jump over. So we just started out slowly, and then in 2016 we really went in a much larger. So what we decided to do for our family office is my husband would do all the liquid because I don't have the stomach to do it. And I've been in venture for 25 years, so for me, I like that so much more because but it's hard to analyze companies in this space. And what I have found, and what I think a lot of family offices have found, is that you really have to, because no one had track records. So when you look at a venture fund, you didn't really have even a track record. So you had to base it upon what they've done in the past, but a lot of their past experience didn't even apply to what blockchain is now. So what we had to do was really speak with what they have invested in this space, and then you actually, you speak with the CEOs of those companies, and you see how much that they have added value. And we had to take a leap of faith. But we just kind of felt that the biggest trend was that this is something, the train has left the station, and that we wanted to be on it early and not late. And so we started to invest slowly in some of the bigger name funds, and then we really kind of grown into doing some directs along with our venture managers. We leaned on their due diligence, and then I'll go through the rest later. But that's how. So we had started out with Pantera. Dan Moorhead was, considered one of the very, very first funds in this space. So we had invested in them. So he was the very first. Yeah, and then happy to share. And then we invested in Dragonfly, and they have done very well. And we invested in Blockchange. And since then, we have morphed more into doing a lot of the direct deals. What we have found is we do like pre-seed and seed. We feel that that's the area to be in. And when you were investing in 2016, that was the only area to be in. There was no growth equity at the time. And now with valuations, now who knows if valuations will come in with the correction that we've just had. But we still like that space. And then I'll go through later, some of the other direct investments that we've made. More to come.
Yep. So I might sit. I'll stand. Okay. Oh, okay. So I'm Dylan. I've been in crypto for 6 years. Most recently, before being head of ventures at Advanced Blockchain AG, ran an $80 million crypto hedge fund that did early stage VC. And then before that was at a big crypto asset management firm for 2 years called Iconic Holding that Michael Novogratz, Alan Howard, and Christian Ungermeyer were the main investors for. And then before that was actually at a crypto hedge fund out of Beijing and Hong Kong doing OTC and market making. So I feel I really loved your responses because one of my jobs at Iconic Holding was to actually due diligence all of the VC firms and all of the crypto hedge funds, and I did this for years. And so we would develop family office relationships because we were total experts in which fund did which trading strategy, et cetera, and who the individuals were. And it was such a difficult job because so many of the people that manage crypto hedge funds, I mean, you know this, are people that have been doing crypto for a very long time. And so you have to have been in crypto for years and years to know the person, to know things about them. Many people don't have traditional backgrounds. A lot of the funds are so new, they don't have big track records. So you are making a bet, and you're making a bet on the person. And so returns have actually been phenomenal in crypto VC and hedge funds. But for example, Multicoin, their first fund returned over 200 times in about 4 to 5 years. And the founder, Kyle Somali, was 25 years old when they first launched. So you are taking a bet on younger people. And so I think that a lot of things that do matter are how early the person did get into crypto and how well connected they are. And then if their educational background, et cetera. But we would do all types of due diligence. So yeah, and then my next recommendation would be to go to a professional like us and to talk to us about it, and not necessarily just deploy without doing tons of diligence. And so, yeah.
I'm going to make a comment. When I was on family office panels not that long ago, well, we're still thinking about Bitcoin. I want to understand. I mean, between the two of you, you killed it. I mean, first of all, Pantera, they were really, I mean, I think if you got in early, the overall returns are some ridiculous thing like 116,000% because they were investing in Bitcoin when it was $100. And Multicoil, I actually know Kyle. He's a good friend with my BitAngels co-founder in 2013, David Johnston. And I met Kyle actually when he was doing a Google Glasses startup that he dropped to start with Tashar Multicoin. And I'm not a direct LP there, but I'm a significant holder of DLTX, which has a significant. They're kind of they're a Norwegian stock that is. David Johnston is one of the founders there, and they want to be the Berkshire Hathaway of crypto. And so one of the things they contributed was a lot of their Multicoin LP position, which again, Kyle has just killed it. I mean, partially since they got into Solana when it was like tiny, and other things like that. I'm a real big fan of them, and so do your research. And you're absolutely correct. It's got to be people who have been in early, and it's a mix, right? Because Dan does come from a traditional hedge fund and institutional background, but when he started diversifying from Bitcoin and went into kind of a $100 million fund that was just for coins and new assets, he brought in my friend Joey Krug, who also just moved to Puerto Rico, who's the co-founder of Augur. And, he founded Augur when he was 20. So I think he's 25 now, and has been making some great bets. So let's see. You're also family office?
Yeah, I was just
okay.
gonna say, it's interesting that you say that because I think we kind of went about it backwards in terms of the family office. I joined Jahan, founder of Kinetic Capital, and he started investing in crypto, I think back in 2013, and then started Kinetic, I think maybe 2015. Charlie, is that right? 2016 maybe? And so I joined him in April, and he said, help me put some structure around all of these investments that he's doing exclusively in blockchain and crypto. So I really bring more of the traditional business practices and traditional strategy, finance, operations kind of practices to what he's doing, because he really just sees blockchain as you do as just life-changing, world-changing, and he's kind of the visionary, and I'm trying to put the bumpers, I guess.
No, I think a good thing to realize about this whole sector is a few things. Number one, we're still very early. A lot of people come to me and say, oh, you know what, I missed it when someone told me about it when it was $8, and someone told me again when it was $80, and someone told me it was $8,000. I guess I missed out now that it's $35,000. First of all, it's not just Bitcoin, and if you sort of look at Bitcoin as a kind of the granddaddy, and we'll hear from the fundamentalist here, it's most likely over the next 20 years to kind of continue its relatively predictable growth cycle. I mean, there's some wild swings in between, just like there are in Amazon stock, and it's actually now more down to the swings of this year was pretty much, just going between 30 and 60, as opposed to before the first halving, you went from a half a cent to $30 and back down to $1 again. You had 100x during the first halving from the halving to the all-time high at that time, 2012 to 2013. That was over 12 months. Then you ended up going and doing a 30x over 18 months from 630 to 19.3. And I've said for quite a while that, I think it's going to be somewhere near 100 at the top of the peak, and probably 24 months, because 12, 18, 24, there's no complete, sort of, it looked like for a while it might speed up a little bit just because of all the money printing going on. But it also looks like, because there's so many altcoin alternatives and so many people talking about the Ethereum flipping, that it's never completely scientific. It's a little bit of art, science, and voodoo, and YouTube. I encourage everybody who's interested in the space to watch several great people on YouTube. For Bitcoin itself and Ethereum, there's nobody better than Benjamin Cowan. He has a free daily 10 or 15 minute update called Into the Cryptoverse. He is dry as toast with really bad graphics, but he has great information. And I also encourage you to buy the premium version. I have nothing to do with it. It's about $1,200 a year, and he has all these like chat rooms and he says when he sells, right? And he sold 85% of his Bitcoin when it was 67,000 in April, and that was all of his Bitcoin that was, as he said, that was not in that was not in short-term capital gains territory. I'm in Puerto Rico, so I don't have to worry about it. It's Into the Cryptoverse, and it's Benjamin. It's Benjamin Cowan. There's a couple other folks if you like sort of the degen coins. Rand Nunuer, who used to be with CNBC. He's the guy that gave me the nickname, the Crypto Godfather, when he was at CNBC. He's now, I just saw him this past week. He was in Miami filming things. He's now with something called Crypto Banter. And then for NFTs, Elio Trades. I'd say those are probably the three that I think have the best information. There's a whole bunch of that out there, and there's actually a few folks that are now aggregating the information, putting AI around it, and saying what were their things that they recommended, how they do afterwards, and those are going to become very important tools. So I'm going to switch now to sort of the people who've been trying to raise money from family offices. So Alfie, do you want to sort of talk about, since you've been on both sides of the fence, how do you approach family office environments?
Absolutely, and I've been grateful to actually know Cara and Sandy, and more recently Chauncey, and so they've been kind enough to actually grant me a significant grant to help me to bring my project to fruition. And that's the beauty of NFTs and the crypto space, is that there's a lot of opportunity for non-dilutive funding. So a little bit of seed capital can go a long way if it's implemented correctly. So we've got a significant grant from Chauncey and from Sandy's family foundation, and so we're using that to launch an NFT collection. And so from that, we can raise a few $1 million through the NFT collection. And then we're going to gamify that collection. And then we're going to do a token sale around that collection. And, we can raise north of $20 million if we do it right with the right kind of marketing. And so those types of funding mechanisms are now available. And they are, again, non-dilutive. But it does require being very smart and understanding the power of the community. So it's less about pursuing and chasing after VCs and family offices. It's really about building community. And that it doesn't require that much capital, but it does require a lot of communication, a lot of time, and a lot of relationship building. Oh, absolutely. So with what I'm doing, for example, is I've got my Defend Nature Interactive is the name of the Metaverse studio, and so we have characters that we've created, and then we're creating a collection of 10,000 of these characters, and then we're selling them to the community for we've yet to finalize a price but for around a few $100s, right? So that is, you're selling basically a piece of art to the community. Now they're investing in that piece of art thinking that, hey, not only is it going to be a piece of art, but it's going to have utility in the future. Now we're also creating play-to-earn games around these NFTs. And so for my game, for example, you'll be able to breed these characters and you'll be able to earn a fee, breed them. So we're breeding NFTs and you're making money off of the breeding fees. So, and there's some great examples out there. Axie Infinity is one of them. It's got a multi-billion-dollar market cap. There's also Zed Run, which is a digital horse racing, and you can breed the horses. And people are making tens of thousands of dollars through breeding fees, breeding digital horses. So there's a whole It sounds strange to us because we're not necessarily immersed in that digital ecosphere. But if you're born a gamer, you're buying digital assets from day one. The beauty of NFTs and play-to-earn games is that you actually own the asset. If you're on Fortnite, gamers are spending billions of dollars on digital assets in the game, but they don't actually own the asset. Crypto blockchain technology allows the buyer of the NFT, of the asset, to actually own the asset. And then you can do some amazing things, some amazing tokenomics with those digital assets. And so there's a whole revolution coming. We're at these are very, very early days. And so we're super excited to be collaborating with some of the more traditional game designers. My games were designed with the guy who designed Farmville, for example. So we're taking that kind of game expertise, but we're applying it, wrapping tokenomics around that and NFTs around that. So, yeah.
I will say, do not laugh at play to earn. The very first time that I presented in front of family offices and other well-heeled investors was the first place that I spoke at a non-Bitcoin crowd was in July of 2013 in New York. The price of Bitcoin was $66. And I spoke in front of about 100 people at the New York Angels. And they had just listened to a pitch where a woman rode up on a bicycle, took her helmet off, and explained about how she was going to go and raise $10 million for a social bicycle app. And everybody's asking very serious questions about, like, well, how are you going to make revenue? Well, we're probably going to use advertising. And, there are a lot of bicycle manufacturers and, et cetera, et cetera. And they're asking all these serious questions. And I'm thinking, social bicycle app? Okay. My friend who was the chairman at the time said they did sell that company to Uber. Of course, it pivoted 4 times and ended up becoming something like Lyft, or not Lyft, but the like one of those little bicycle things. So they're like a motorized bike. So they pivoted about 4 times. The original plan did not work. At any rate, I then came up and told 100 people about Bitcoin and how I thought it was, a phenomenal new opportunity, a new asset class that was going to change the world. And, room about twice this size looked at me like I was selling skin cream from Mars. And I asked if there's any questions. I went through how it worked and, how its growth pattern was going to be and what its utility was. And literally no questions. And then during the break, this elderly gentleman came in to me and said, "Son, you look like a nice young man. I was a professor of economics at Princeton for many years. I have looked into this Bitcoin, and it only has 2 things you can do with it: drugs and prostitution. I suggest you run away from this as fast as possible before you get arrested." So, don't laugh at play to earn gaming. NFT gaming is the next frontier in terms of growth. I'll give you a couple of stats. Gaming itself in the last 5 years has gone from $100 billion to a $300 billion industry. There are 3 billion, million. There are 3 billion gamers in the world out of a world population of 7, and that's growing. And yet there's only about $30 billion of market cap that is involved in gaming, and that's up from 0 2 years ago. So as the percentage of people who realize they can make money while they're gaming instead of spend money while they're gaming grows, there's going to be other axes. Axie actually launched at Coin Agenda 2 years ago, and 10 cents a token, and I did not invest. It did not even win one of the top 5 awards. But boy, they sure did well. They went from 10 cents a token to 125, I think, at the top. And, even people who have been in this space a while miss things. So you have to constantly pay attention to what's going on. So with that as my pivot to talk about Bitcoin, I will let Maximalist Guy talk about what's going on in El Salvador and where you see Bitcoin fitting in terms of Lightning Network and becoming a unit of account, which is how you really become money.
Sure. Thank you. Chris Hunter. Just by way of background, before I got into Bitcoin 8 years ago and started building on Bitcoin, I spent most of my career focused on climate change issues and renewable energy, and so built a number of companies quite successfully from scratch there. So happy to also talk about the intersection of energy and Bitcoin if people want to have that conversation as well. To the question, just a little bit of context. You know, if you look from a historical perspective, we were gifted the public internet in 1983, and we were given a number of protocols for free: HTTP, SMTP, FTP. We were given no protocol for native identity on the internet, and we were given no protocol for native money over the internet. I'm not a true Bitcoin maximalist because I do believe NFTs and many other protocols will have value, but last time I checked, money is kind of important to humanity, and in my estimation, many years ago, Bitcoin already won the battle to become internet native digital money, money over IP, and we can talk about the principles behind that, and one of the most fundamental ones relates to, there's many attributes of Bitcoin, and this is why it's difficult for people to get their heads around, but one of the most fundamental attributes relates to governance, where it's written in digital stone. You can never have more than 21 million Bitcoin, and nobody controls it. No actor, no entity, no government, which is different than Ethereum and every other protocol, in so much as that no matter how well-intentioned people are, once an organization gets to some degree of scale, whether a business or government or even a charity, corruption always becomes involved. And Bitcoin is truly uncorruptible simply because it's math on the machine. And maybe I'm wrong, but I think over the long term, it will prove out that unlike all the fiat currencies that are being debased or anything else that could be controlled by humans, Bitcoin will become the most widely used money in the world. And, you know, the other bit that I'll say to give context for El Salvador is that, you know, people read Satoshi's white paper that he published on Halloween 2008, and they read peer-to-peer electronic cash, right? And they say, oh, cash, digital cash, I should compare the Bitcoin base layer protocol to Visa or PayPal, something else that feels like digital cash, and that's where they go wrong. In my company, we published our thesis 18 months ago where we lay out you should be comparing the Bitcoin protocol to Fedwire, not to PayPal or Visa. And Fedwire is managed by the Federal Reserve, the central bank of our great country, and that's where all final settlement of dollars happens, right? And most people don't know how the money system works, but Fedwire is a private members club. There's only 9,000 entities that access it. I doubt anybody in this room has access to Fedwire. I certainly don't, right? It only operates a limited number of hours per week, right? It's not extensible, and you have final settlement on Fedwire in 3 to 5 days. If you swipe your card today to check out of a hotel, that settlement on Fedwire will probably happen Wednesday, Thursday, or Friday of this week. The Bitcoin base layer protocol is completely different. It operates 24/7, 365. It's non-discriminatory. If you're a human being with an internet connection, you can access the Bitcoin base layer protocol. It's completely extensible, and people say Bitcoin's slow. Bitcoin's fast. You have final settlement in Bitcoin basically after 3 confirmations or 30 minutes, not 3 to 5 days. And so in our thesis, we lay out, just like we built all these layers on Fedwire post-World War II, starting with commercial banks, then in 1956, something called Diners Club. 1958, the precursor to Visa, credit cards. So we've got commercial banks, credit cards, ATM networks, peer-to-peer like Venmo and PayPal. We're going to build the same layers on top of Bitcoin, which gets to Lightning, which is a layer 2 on top of Bitcoin, which is what we're building on, which makes it easy and fast, basically instantaneous and nearly free to settle a transaction, right? You can think of it somewhat analogously to credit cards, but it has much more interesting applications than just being fast and cheap, which it is. And so that's what led us to El Salvador, where a year and a half ago, summer of 2020, I went to all the fancy VCs to raise seed capital for my business because we want to build the #1 infrastructure company to make it easy for people to set up a Bitcoin bank with a push of a button, right? So we don't want to be the bank. We're a software as a service company, but whether you're a company or a community or a government, you can use our tech stack to offer banking solutions to your constituents. And I went to Pomp and Nick Carter and Melton, these people I'd known for years, and they said, we love you, and Nicholas, my partner, we totally believe your thesis is 100% right in terms of how the world's going to evolve, and we're giving you 0 money because we think you're 5 years too early. And so in August of 2020, on the back of all that rejection, literally every VC in the world rejected us, we bootstrapped the company on our own. We went to El Salvador, and we focused on this small town of 3,000 people on the Pacific coast, relatively impoverished. Average wage is about $400 per month. And we built for them not just a wallet, it's called the Bitcoin Beach Wallet. It's a very sophisticated wallet, both on Google and Apple iOS, but a complete back-end banking infrastructure, which is pretty sophisticated, and we could talk about that if people are interested. And we proved in this small town where people had never had a bank account, merchants never had any kind of credit card terminal solution, truly a cash economy, we proved that you could do tens of thousands of transactions per week on this layer of Lightning and teach people how to use and provide access to financial services. We basically created a postcard from the future, right? And this is going to happen square which just rebranded as Block, led by Jack Dorsey, 2 weeks ago enabled Lightning and all their Cash App wallets, right? Cash App is bigger than Venmo in most of the US right now. So this wave is coming whether you like it or not, and what we built in El Salvador proved that this stuff works. It's not 5 years too early. Last June, President Bukele got up in Miami and said Bitcoin will become legal tender in country, and that went into effect in September. So that's the context there. So I have complete conviction that if we're talking about money over the internet, Bitcoin has already won that battle, and we and many others in the industry are building solutions to make it very easy. And I would say within 10 to 15 years, Bitcoin will be the most widely used money in the world, even more so than US dollar. And the US dollar is not going to go away, but Bitcoin has so many advantages that we can get into those details, and El Salvador is just the tip of the spear here.
Thank you for that. And it's very interesting just sort of how store of value, not only for Bitcoin, but for across multi-chains, even someone considered to be sort of a top early evangelist for Bitcoin, Andreas Antonopoulos, is not a maximalist, and he's basically believes that there will be, kind of many chains, but really one kind of interoperable, blockchain of value. And a good example of that is Axie Infinity has been mentioned a few times. Axie actually has its own native currency that now has something like $600 million stored in wallets by people who do not have bank accounts. It took off in the Philippines, really went viral there. That's also where like social media first took off. When Twitter launched, when Facebook launched, when Friendster launched. I mean, that was a very early place that it took off. And the fact that there are so many countries in the world that it's very hard to get banking accounts. I mean, I live in the Caribbean. Puerto Rico is, part of the United States, but it's also smack dab in the middle of the Caribbean. We are a Caribbean, island that is also a U.S. territory. And so you look at the Caribbean, Gabriel Abed, who, again, was mentioned, I, and Roger Ver, who, is a St. Kitts citizen, although he now spends most of his time in St. Bart's because he's worth about $20 billion. He got into Bitcoin back when it was $1 and bought 250,000 of them. Almost crashed at Mt. Gox just by that size of order. And he's called Bitcoin Jesus because he was just going around giving away Bitcoin to people just to try it out when it was like $1. Or $2 or $5 or $10, and so many people are like, "Oh, damn! What did I do with that? with that $50?" That and he's now kind of Bitcoin Cash Jesus because he got very frustrated with the fork in Bitcoin that led to Bitcoin Cash, and then another fork that led to Bitcoin Satoshi Vision. When Craig Wright said, "I'm Satoshi," we won't get into that whole battle, but last time I ran into Roger, he gave me $100 worth of Bitcoin Cash. Not that I already didn't have it. He was just like, yeah, give it to your friends, show it around, et cetera. So he's still at it. But the Caribbean, the reason I brought that up is that something like 80% of the people in the Caribbean are unbanked. It's very hard to get a bank account in much of the world, and yet anybody has the ability to be their own bank. That was the original theme of blockchain.com, which is a very early wallet that was seed funded by Roger Ver. And so how many people in the audience here have at least one Satoshi of any kind of cryptocurrency? Raise your hands. Okay, it's about half. The other half, talk to the panelists. Really, it's something that's important to understand. Once you, most people who tell me like Bitcoin's a scam, Bitcoin's a fraud, I was like, have you ever been have you ever used Bitcoin? No. That's like saying a car is never going to replace the horse if you've never been in a car. So, at any rate, there's a lot of other experts in the room. I mentioned I'm an investor in Tradery Capital and Tradery Labs. Michelangelo is here, is happy to explain all sorts of things about Bitcoin as well. And I'm going to answer some questions from the audience. Some fun ones here, and then we'll see if there's any others before we run out of time. First one, what are your favorite themes for 2022, DeFi or interoperability? I would answer mine as saying NFT and Metaverse.
For myself, I definitely would say the Metaverse. On behalf of Jihan, he would definitely say NFTs. But also play to earn.
Yep.
And that's all in the same. I think that's all in the same area.
Right. So our
DeFi was last year, and it's still kind of going into its next iteration. Once the SEC decides that they're not going to like be stomping on anybody who's not a bank who does DeFi, I think it'll explode when the average person, not the people in this room, but the average person who's got a 0.7% savings account realize they could be making like 10% on DeFi. There's going to be a real second wave of explosion in DeFi.
Yeah, I agree. We specialize in DeFi and interoperability as a firm. So I'm always bullish, and I think that that's going to happen pretty imminently. But I'm also leading us into the Metaverse. So we have actually invested into Player and Games and gaming studios. So, yep.
Yeah, I'll stick to the original question. I say DeFi is more important, and Michael almost, previewed, my thoughts in so much as that, Nicholas, my partner, and I, we went to El Salvador not because we didn't want to start our business here in the U.S. We're a U.S. C Corp, registered in Miami, but we went to El Salvador in part because we could actually innovate there. There's basically no regulation in El Salvador, and it's not like we were looking to do anything malfeasant, but you can't innovate in the U.S. because of the regulations and because of the tax treatment, all right? Every Bitcoin transaction is treated like a capital gains transaction, and so I think we're at a critical moment. What I want to highlight here is we're at a critical moment when it comes to regulation in this country, and we have an SEC chairman who's not very favorable, even though he's very educated on the topics. And, I think what happens in the next 12 to 18 months in the U.S. Congress, could completely squash DeFi and its prospects for growth here in the U.S., and it's going to grow elsewhere around the U.S. or elsewhere around the world, whether we like it or not. So we should probably embrace this technology, even though it's a threat to the incumbent financial system.
Michael, I like it all. I like DeFi, I like NFTs, I like Metaverse. Well, I mean, so I am COO of Hut Capital, and so we did see, DeFi going down a bit, and then we just saw a whole spike in the NFT. For me, for a family office, I believe in diversification, and that is really what Hut Capital, they do all the emerging blockchain managers, whether it's globally or, you know what? Forget about the general VC funds. They can't do it anymore. There's just too much now. This whole space has just grown where the managers have to be niche. Another thing that I like about managers is, for example, like advanced blockchain. What I love about what you guys are doing, they say incubating, but it's really from the ground up. They have developers in-house. So what do I call that? Proprietary deal flow. I love proprietary deal flow. The market, there's a lot of money coming into the market, but now the valuations are getting very, very high, and then people are chasing the same deals. So as a family office, what do we look for? We look for proprietary deal flow.
Wonderful. As someone who's building a metaverse, I'm obviously partial to that, but I like the phrase GameFi, which is basically gaming, play-to-earn gaming, coupled with DeFi. I think Axie is proving that concepts like UBI are actually now possible through the metaverse. So instead of going to work and what have you, you can actually go to play and earn a living, and that's a whole revolution that we're at. Axie's proven the concept, and I think that's just going to blossom. So for me, GameFi is the future.
I just invested in a GameFi platform yesterday that also brought me on as an advisor. I guess my areas, first of all, I would say that as these waves emerge, they, like any other market, they kind of get really hot and then they peak and then they kind of, go down. And the quality, just like the .coms, the quality companies survive. I mean, Amazon went to 1,000, then it went down to $5. And if you sold it 1,000, bought back at $5, and now it's like what, 3,500 or something like that. You have to know what the trends are, but then you also have to be able to say, I think I'm going to keep the winners, and I think I'm going to sell the also rans if they really don't seem like they're keeping up with the you're correct. You have to really be a specialist in this market. I mean, I've got, at Transform Ventures, I've got like 4 people that just help me with deal flow, and we're just flooded. I mean, I probably get, 100 deals a month that are thrown my way to invest in, want me in as an advisor, et cetera. And I mean, last year I put a little under 10 million into deals, And I mean, $1.5 million of it was into Bitcoin mining across a couple of different SPVs and two companies that went public that were had Bitcoin mining as a good part of it, and that was a really good investment. Also, a number of DeFi companies, and I put $1 million into investment also that the Advanced Blockchain is in, which is SDG Exchange, which is a first kind of Nasdaq for carbon credit trading on a permission blockchain, and also has a public aspect as well. Anybody wants to ask me about that? But other things like Tradery, of course, and some things on NFTs, aren't just PFPs. They're not just profiles. I invested in IceCap, which is lets you invest in real investment grade diamonds using NFTs. That's actually Eric Voorhees' dad, Jacques Voorhees, who is an OG in that space. And they went from, like, when I invested, they had no sales. Their first quarter, they had $2,000 in sales. This month so far, they have over $1 million in sales. That's a 1 year. So you look for things that can really scale and just grow really fast, and then just really get to know the team. Really, if you're making your own investments, I mean, you have to go and you meet the team, even if it's on Zoom. You have to do due diligence on them, etc. And so I'll move on to the next question. When is Ethereum going back up to 10,000? Well, that's easy. It's never been at 10,000. So, I personally, it's interesting that Ethereum has dipped more than Bitcoin now. It tends to be a more volatile asset, so it tends to have a wider range. I'm personally the belief that, at whatever time Bitcoin gets to about 100,000, Ethereum should be in the range of 10,000. So that would imply that with, sort of $2,400 Ethereum and $35,000 Bitcoin, that Ethereum may have higher potential to go up. I think they're both core assets, and this is a good time. Even though I believe your bot is not buying Bitcoin yet, but it was starting to buy Ethereum. So, I think there's still, you can never catch right to the day the bottom or right to the day the top, but you do need to be aware of cycles and trends.
I don't have any comment.
I think, I would probably buy Ethereum on this dip, and it will likely hit 10,000 in 2022. Yep.
I'm as a Bitcoin fundamentalist, I'm also long Ethereum, so getting in at these price levels is probably broadly a sensible move. I think just on price action in general, I mean, one thing to keep in mind, we think we have free and open markets in the U.S. We do not. These markets for Bitcoin and Ethereum and other, relatively liquid coins and tokens are basically the only free global markets that we have. I mean, compare it to NASDAQ. If a stock, first of all, NASDAQ only operates a very limited number of hours per week. Secondly, if a stock goes down by 7% in a day, it's short-circuited, right? And you stop trading. That doesn't happen here at all. In these markets, if you want to trade Apple stock, you have one choice of venue. You can trade it on NASDAQ or NASDAQ, right? In crypto, you have basically something like 10 global exchanges, right? Here in the U.S., we have Kraken and Coinbase. Elsewhere, there's FTX, OKX. So the insight there is it's fragmented even at the exchange level, right? And then there's all these derivatives. And so it's both, a truly global market, truly freely traded, but highly reflexive both on the downside, which you've seen in the last week, as well as on the upside. And so it's just a completely different dynamic and something to be aware of. And for most people who are not like Chauncey, who are not going to be staring at the screen 22 hours a day trading, it's probably just better to have a buy and hold strategy and do not much more than that.
Absolutely.
I think they have to solve the gas problem. I don't know if people know that whenever you do a transaction on Ethereum, you have to pay gas fees. The NFT market has blown up, but people are paying more on their gas fees than actually earning on their or paying for their NFTs. So Ethereum 2 is coming out. That's supposed to reduce the gas fees by more than 99%. When Ethereum 2 comes out, I think it's going to go quickly to 10,000.
No one's talking about taking away the gas fees. It's just the efficiency of them. So Polygon also has gas fees, but they're pennies instead of dollars. And Bitcoin had gas fees that drove people away, including Bitcoin Jesus, when they got up to $20 per transaction. And because nobody controls Bitcoin, it took several years for the 95% consensus among the miners and then the developers to be able to go and agree in the kind of SegWit 2 plan that finally ended up lowering fees to now where it's a fraction of what it was when it was $20. It's still a lot higher than some other places like Polygon, etc. But and there are some, Wax, for example, is a project that I invested in and was an early advisor to. Was arguably the first NFT ecosystem token, and they, I believe, have more NFT gaming than anybody, including Solana right now in terms of just number of assets. I remember they just announced that recently. But they have no gas fees. I mean, or they're de minimis, and because they were built on DPoS, which is we're going down the rabbit hole now about how different mechanisms are for securing the blockchain. There's proof of work, there's proof of stake, there's delegated proof of stake, and we would have a whole panel to go into all those things. I'm going to rapidly go through the last couple of questions. I'll read a few that I'm going to ignore just because they're kind of funny. Is crypto really a kleptocurrency? Let's see. This is a simple one. Do NFTs require the same amount of energy to create versus cryptocurrency? And basically, no. But they do cost gas. I think we just ran through that. Here's an interesting one. How will sovereign stablecoins affect the crypto market, especially if the sovereignty bans crypto outside of its coin? I'll start by saying that a lot of places have banned Bitcoin, and it's still, as long as you still have the internet, it's very difficult to stop people. Just like, last I checked, marijuana's banned in a lot of places, and it didn't stop people from smoking marijuana. Bitcoin is banned in Nigeria, and yet Nigeria has one of the highest levels of adoption. I actually have a couple of contractors in Nigeria that I pay in Bitcoin.
I actually have a question.
Yes.
So you mentioned Puerto Rico, and I would just be really interested in your perspective of how you see the community changing with so many more blockchain and crypto people moving there, and how you think that will expand and deepen our community.
Sure. I'm always happy to talk about Puerto Rico and the community down there. Oh, fantastic. Yeah. No, the opportunity of Puerto Rico is, for those of you who don't know, is the only place in the world that U.S. Citizens and green card holders can pay zero tax on their capital gains and 4% on their corporate income and nothing to the IRS. And that is because Puerto Rico is the largest territory. There's 5 territories in the United States. The other 4 combined are like, Guam, they're all 50,000 person islands. Puerto Rico is like 3.2 million people. San Juan itself is about the size of Austin, Greater San Juan. So it's a real city. It's one of the only real cities in the Caribbean other than Havana, and they've got other issues. But basically, it's not a little sleepy, Caribbean place where there's nothing to do but go to the beach. And so it became attractive for Bitcoin investors and entrepreneurs. I mean, really, the first wave was people from the hedge fund industry. When they've had a series of decrees between the U.S. and the territory to be able to create jobs and also to be able to keep it from being far poorer than Mississippi and West Virginia, which it was for the first 50 years of its existence as a territory. The decree they had in the 1960s to bring aerospace down for 20 years, build factories, and give tax breaks took Puerto Rico from being one of the poorest places in the Caribbean to one of the wealthiest. In the 80s, they did a 20-year tax break to bring down the pharma industry, and even after that expired, Puerto Rico, if it was a separate nation, was the 7th largest producer of pharmaceuticals in the world. And so in 2012, they decided, let's go and do something where we're not going to build factories and then have to repurpose them once the breaks expire. And so they did software and services. And so the software and services is the 4%. If you're in software or services, there's certain things that are they're not included, like law firms. But generally, if you're a software company or a services company, I have a services company that does advisory and communications. I then spun off another one that does advisory, and those pay 4% on our income. Staking, by the way, is income, and you pay 4% instead of 39% in the U.S. And then the great thing is capital gains. Capital gains, literally, you pay zero on your short term and zero to your long term. You have to report it, and then you say zero. So if you have $10 million in capital gains, you basically say, I have $10 million in capital gains. I'm paying you zero, Puerto Rico. Thank you very much. And you basically write a Dear John letter to the U.S. and say, I'm now a Puerto Rico bona fide resident, and all we do on our return is really report what we have on U.S. income for our mainland real estate holdings. And really what's happened, I was the first person to move down there from the crypto world 2 years before Brock Pierce. Brock called me patient zero, which got kind of laughed at because Samantha Bee said, what could go wrong with that? And it's sort of like an infection and things like that. Dan Moorhead from Pantera had been asking me about Puerto Rico for quite a while because he wanted to move down. He just had to convince his wife. They found a beautiful place in Dorado Beach. And when he moved down, he nicknamed me the Messiah for all the people I brought down. So I guess that one's kind of stuck. There are now more than 500 people in Puerto Rico who've come down from the cryptocurrency movement. And I'd say more than half of them have been in the last year. David Johnston, my co-founder, was like very skeptical. He said, well, yeah, I thought when Mike moved down, there was kind of a, retire to a sleepy island thing. Now I realize there's more going on than there is in Austin. There's crypto events every week, sometimes multiple times a week. And what's great is it's sort of like, I like to say there's this thing called magical cities in terms of like a time and place where you want to be. Paris in the 20s, New York during the Algonquin Roundtable, Silicon Valley in its heyday. Silicon Valley is a ghost town right now. Literally, everybody's moving to Miami or to Puerto Rico. And I'll go back to Puerto Rico, and I have more meetings and people visiting, people there that I know what to do with. Is way more than Los Angeles or New York. So, yes. 4% for corporate, zero for capital gains personally. As an investor, zero for your personal capital gains. And if you have both, which I do, and I recommend people do, if you have 4% for your company, let's say you've got a consulting company and you made $10 million in profit, and you pay yourself a normal salary of, say, $200,000 base, you get to not only have zero on your investments, you also get to have 0% on your dividends and your bonus to yourself. So that's why the hedge fund industry moved down there first. And then oil traders and now crypto. Local taxes? No, it's a territory, and what happens in Puerto Rico is it's generating jobs and it's generating wealth. So, actually, Michelangelo, you were born in Puerto Rico. Answer that question, what crypto is doing for Puerto Rico.
Oh, great. Hey, my name's Michelangelo. I was born and raised in Puerto Rico. So I think, at least for me as a founder, I have a fund now. I've built AI for like 5 years to predict the markets. It's been going great. Liquidity markets are the big thing for startups on the island, local grassroots projects. Before, we didn't really have any venture capital or any kind of seed investments. And so a lot of people are moving over, Pantera, for example, people like Michael, and they sign checks, whereas before there was no one. So there's that.
I'll just finish up on this. I think it's sort of the brain power that's coming down there. I mean, there was this little meme that was going on when Brock moved down and saying, "Hey, you're ruining the island because real estate prices are going up and you can't afford a place to live." It's sort of like saying, what happened to the farmers that got displaced when Silicon Valley started building things, right? I mean, there's still very affordable place to live in Puerto Rico, just not on the Ritz-Carlton estates where the average Puerto Rican wasn't buying anyway. I think for the most part that most of the narrative that we're hurting Puerto Rico by coming down there and displacing natives is just garbage. And it was started by the Independence Party. So there's 5 parties down there. There's no Democrats, no Republicans. There's the Pay and Pay, which is the I want to be a state party. There's the Pay to Pay, which is we like it as a territory. There's 3 different independence parties, and they're very loud saying, gringos get off the island. We want the island to be independent, and honestly, they want it to be Venezuela, and I don't think that's good for anybody, and I don't think the U.S. is going to let them declare independence and become a socialist country. So I think everybody down there, the real estate, okay. My native-born real estate agent, who I bought both of my properties from when I moved down in 2016 and again in 2017, she did $54 million of sales in the last 6 months. And before this act, she would have been lucky to do $2 million in a year. So there's a lot of people. I mean, the people who are buying homes out of these high prices, they're buying them typically from people who live from the island. Yes. Sure. I will turn over to him. I mean, obviously, they've got volcano power and stuff. I would just say that there's a lot of data saying that there's a lot of FUD that's come out about, crypto costing, most of the statistics you hear about, an average, Bitcoin transaction costs X, or Bitcoin burns up more energy than the entire country of Denmark, is just garbage. Most of the stats came from a 23-year-old college student who basically was quoting institutes that he himself founded. So, and the media didn't do very good due diligence. Energy usage is a very complicated scenario. I will tell you, Rhodium, which I'm an investor in, they get 1.9 cent energy, which is 70% right now is renewable energy. And when they had problems getting energy from a otherwise abandoned project during the hurricanes, they were able to sell energy back. So for the most part, it is. And by the way, ATM machines and banks, they cause energy too. There's been a lot of statistics saying gold mining is 20 times the energy usage of Bitcoin mining, and banks are even more.
So I'm going to frame it a little bit differently, and I think this is a big deal, and so I mean there's a couple ways to get at it, but almost 100 years ago to the day, December 4th, 1921, top of the fold, front page, New York Tribune newspaper. Henry Ford, who is widely respected as a pretty, successful visionary and thoughtful businessman, said if you wanted to stop all wars, you would have a currency based on kilowatt hours. And that's actually what we have with Bitcoin. And so that's point number 1. Point number 2 is there's different consensus mechanisms for these cryptocurrencies, right? And so the most fundamental one is proof of work. There's others like proof of stake. Ethereum is based on proof of work, and proof of work, as is Bitcoin. And proof of work means you just have all these computers voluntarily throwing their computing power at the network to solve math problems to achieve consensus in this like chatter where we say, is that a good transaction or is that a bad transaction? And that's how you can have these networks work with no bank or no company or no government controlling them, right? And so this is why I'm a little bit bearish on things that are moving to proof of stake or other things that are not proof of work over the long term, because the reason why Bitcoin's going to win is it's not controlled by any government. You're not going to debase this currency. You're not going to manipulate it. You're not going to have a corruption. It's uncorruptible. And the insight there is you want Bitcoin to use all of the power in the world. You want Bitcoin to use more energy, not less, because that's what secures what is already by far the most secure public computing network the world has ever seen. There's no industry that's ever been beneficial for humanity where at the outset we say, oh, should it use less energy? Refrigeration is good. We all agree that. It allows you to store food that's fresh for much longer periods of time. Pharmaceutical manufacturing is good. Electricity so you can see at night is good. Transportation, whether in the form of an airplane or an automobile. None of these industries did you ever have somebody at the outset saying we should use less energy, or is the energy use worth it? This is all FUD, fear, uncertainty, and doubt by the powers that be who control the banking system and the governments who want you to intentionally misunderstand Bitcoin because they know that Bitcoin is inevitable. It can only be slowed down. The only way to stop Bitcoin is to turn off the internet. And the last bit I'll say is the playbook that creates all this uncertainty and misinformation about Bitcoin mining and its energy use is the same playbook that the tobacco lobby used in this country post-World War II. And from 1950 to 1990, we had 6 big tobacco companies in this country. And the 6 CEOs of those tobacco companies never said for those 40 years, smoking doesn't cause cancer. They just raised a question about it. Does it cause the bad cancer? do we really know for sure? And all that BS stopped in 1989 when those 6 CEOs were hauled in front of U.S. Congress and forced to produce the paperwork that showed scientifically they knew since 1950 that smoking would kill you if you smoked before you got hit by a bus, right? And that's the same playbook. Like Jamie Dimon is a very smart guy. He knows that Bitcoin is inevitable, and he sells it to his private wealth clients, right? But he talks out his mouth publicly about how this is bad and how the energy use is bad. It's all just a myth. We have to reframe it. More energy use by Bitcoin is good because that's what prevents the corruption, and we can have this truly non-sovereign digital money that works for all of humanity.
Yes.
I wrote a long Twitter thread on this that went viral, so you can find me on Twitter, BTCNYC, and you can read it there.
I've got a question. So the tables are kind of turning now with investors and entrepreneurs and creators, etc. So I wanted to know from the creators and entrepreneurs on the panel, what do you guys look for in investors? And from on the flip side, as even as a foundation, as a what do you offer as VCs, as family offices, as foundations? What do you offer to the people that you invest in or donate to?
Yeah, that's a great question. I've been very, very wary of VCs. I've been self-funding for the past decade, and so I've been very, very cautious. I have looked at capital, but every time I go out there, I just feel cap in hand. I don't feel like I'm forming a partnership with and so it's been a very, and this is why having your friendship, Cara, was really, very powerful, and yourself, Sandy, as well, was because I trusted you guys. I knew you knew my vision for many years, and you watched me grow the vision over many years, and so it was very powerful for me to have that first check come from you. And the beauty is, I've got a grant as well from one of these other blockchains as well, ecosystem grant. So between the capital that you've provided, the grant that you've provided, and the grant I get from the ecosystem grant, I should be able to, in theory, be able to bootstrap hopefully a unicorn from pre-seed funding, from grant funding, non-dilutive capital. So this is the miracle that, as an entrepreneur, as a creator, that blockchain is allowing me to do what a few years ago would be impossible to do. You wouldn't even consider being able to bootstrap a unicorn with a couple $100,000, but now that's possible because of the mechanisms available. But again, I did go out a couple of years ago looking at raising a few $1 million, but it was just difficult, just challenging. I'm like, and I didn't like the process. I think the whole VC model is. It's a Ponzi scheme on some levels, because all they're doing is pumping up the numbers. They're throwing money at companies, pumping up the user base, and then just going to IPO and exiting to. So I don't like the VC model, and so I was very hesitant about the VC model, and I'm grateful that the family office, the family foundation, was supporting me. Yeah.
Just a quick word on that. Sandra and I actually sat next to each other over dinner, and we're just talking about this. And, it's kind of the old adage, like, hey, I'm here to help, that the VCs say. But I would sum it up in one word. It's relationships, right? We built our proof of concept, this community Bitcoin bank in El Salvador. We're going into other countries now. We're building neobanks for wealthy families in other Latin American countries. I'm personally, to various degrees, engaged with the presidencies of 6 other nations about adopting a Bitcoin standard. What would they need technically, to walk that path. But to come back to the question, I was telling Sandra, like, if you have relationships at the political level or the business level high up in certain countries, mostly in the global south, like, that would be one, like, very specific example of how, an investor could be useful to us. And so it's not like, do you have the domain knowledge? It's more like, can you get me in a door that I normally couldn't get in the door on my own?
Well, yeah, Alfie, I think your comments about VC being a Ponzi scheme are really interesting, and I almost want to kind of discuss them, because I think that's kind of why we do the work that we do, right? Which is, we're value-add investors, and we're a value-add firm. And so I think that if it's just money that's on the table, then it is very, in some ways, predatory. And so we're always here to help, but we could after this have a very long discussion about how other forms of the economy are Ponzi schemes. This is one of my favorite discussions to have with people. So yeah.
I think both as a family, speaking as part of whether it's Kinetic, the VC portion of our investments, or the family office, or social alpha, I think our kind of underlying theme is, how will this idea or how will this project change the blockchain universe? And so I think with Kinetic's investments across the blockchain ecosystem, he really is thinking about, and Kinetic is really thinking about, what impact will this have on blockchain? How big of an impact can it have on blockchain, and where can I add value? So he's, we're constantly, we, mostly Jahan, because he's the content expert, but really constantly adding value in terms of relationships, to Dylan's point, across his different, couple hundred different portfolio companies. How can Blockdaemon help, I don't know, any of these, Flare or any of these other investments that he has, and he's constantly making those various connections. So I think that's really where, at least at Kinetic and even at Social Alpha, where we brought on a new fellow, Catherine Foster, who's really a climate diplomat from the UN and from the UN and other areas, and she brings a real interesting perspective from the innovation space in climate diplomacy and climate action. So I think, certainly the monetary, financial impact is important, but for us, it really is, how can we make it bigger? How can we make the universe bigger? How can we make it deeper?
Yeah, so somebody who has both taken VC money and written checks, and been an LP in a fund, and a GP, I think it's all about an alignment of expectations, and I personally, when I start things that I incubate through Transform Ventures, when I'm an advisor, or I come onto the board of a company as a director, or as a chairman, or as just an advisor who's kind of helping them make decisions on capital raising. I mean, in this market, typically you're going to want to get your first rounds from angels, because angels are easy when you're first starting out. They want to help. They're not going to demand big board packs every month, etc. But I'm also a director of a public company, a SPAC, Blockchain Moon Acquisition Corp. It's on NASDAQ, BMAQ, and that's a different world, right? You don't get. You don't raise $110 million and then have pipes through little seed investors. So it's all about stage and alignment of expectations. Earlier in my career, I took money from Sequoia Capital and Humber Windblad and a few other VCs to start a company. It was very fast moving in the .com days, where I started out with angels. And then all of a sudden we grew so fast that I was getting thrown all these offers, and I took Sequoia Capital and Humber Windblad. In the beginning, it was phenomenal, and had we made it through before the market tanked, those folks will give you a much higher valuation. Look at YouTube. Look at some of the things that they've done in a bull market. In a bear market, you're just kind of hanging along for the ride. And in year 7 of the fund, even though we were profitable and hadn't even burned through the money that we raised, Sequoia's like, well, year 7, time to put you on the block. It's like, wait. If you hold on and just till we, we're making money, we got $2 million in the bank, we're making a couple $100,000 a month. Nope, it's year 7. We got to sell you. So I lost the board vote. We sold the company for $35 million. It's called MarketWire. The company we sold it to, I lost a narrow board vote. There's no reason to sell it other than Sequoia didn't want to come down to Los Angeles for board meetings. They wanted to move on to the next fund. And none of my guys who agreed with me wanted to go and vote against Sequoia in the board vote. The company we sold it to sold it for $100 million 11 months later. We thank God sold back to our original partner NASDAQ for $200 million, and then NASDAQ then merged it with another company, a smaller company, and sold it for $335 million to Apollo, where it is right now. And I understand it's being shopped around for $500 million. So obviously, had we had aligned expectations and a longer sort of timeline, there would have been more than 10x the return. However, over a longer period of time, I still got a nice check, and I got to move on and do other things. I think the lesson of the story is just understand what stage you are and what level of growth that you're willing to have, and what level of scrutiny. If you're an angel investment, all they want to make sure is you're not a lifestyle and you're listening to their advice. That's what I expect. And then, when you're moving fast and all of a sudden, if one of my portfolio companies, like IceCap, all of a sudden says, "Geez, we just we just went from like $2,000 a quarter to $1 million a month. Okay, it's time to like start looking for more professional money." And now, they're looking for an A round, and I'd be happy for them to be taking VCs on that round, because the next round is to then go and sell it to someone like De Beers, or or some strategic, or see if it can be a SPAC. I mean, so it's all how fast you're moving and what your expectation level is. But the great news is there's so many great angels around. By the way, everybody should sort of give their contact information. I'm at Michael Turpin, MichaelTerpin, on everything. And if you kind of message me on Telegram, I will be happy to kind of like tell you what kind of stuff I'm investing in. I've got a little private Telegram group of, it's not a syndicate. I don't take any fees. I just sort of tell people what I'm investing in, and they say what they're investing in. It's sort of just a deal flow group that, I'm very proud of. And if you play by the rules, you get to stay in the group. If you shill too much garbage, you get kicked out. But I think this group is a good group. I have a question there. Well, that's one that I'm very knowledgeable, because I'm chairman of a company called SDG Exchange, which is the first and only global 24/7 carbon credit exchange that's built on a permissioned blockchain. And there's several other tokens out there that do half of what the Paris Agreement says it should do. So Climate.io is out there, Moss Token's out there. All they do is buy carbon. Climate.io says we'll buy carbon and never sell it, and therefore the price will go up. Moss Token equals 1 metric ton of carbon, but because it can be pumped and dumped on Uniswap, sometimes the daily price goes up and down, and you can't retire it. So we're the only platform right now. We launched at COP26 that an actual Fortune 500 company or anybody else that needs to comply with the Paris Agreement and what's known as the Task Force for Financial Disclosure that Mark Carney started, that's going to kick in next year, where companies that are public or have more than 500 employees are going to get a climate score, and your loan rate is going to depend on your climate score, not just your Dun & Bradstreet. There's going to be a big demand for that. And so, we're really the only solution right now to be able to kind of go and efficiently, and transparently buy carbon on something that looks like NASDAQ, that has an OTC desk, and then retire it, and we pop up an NFT, and you get to see the whole provenance. And any questions, just sort of come up to me afterwards, or send me something on Telegram. Anybody else in the climate space? I think there's a few, right?
So I spent most of my career working on renewable energy issues. I was, investing in renewable energy credits in the 90s before anybody knew what that was. Pre-financial crisis, I was co-manager of Climate Change Capital, which was a $2 billion fund in 2007, exclusively investing in this space. I have a slightly different point of view here on this one as well. I think most of this stuff is just greenwashing, unless we have like a truly global or even regional cap and trade regime. Like, well, sure, we had Kyoto Protocol in 1997 as well, and well, I mean, people voluntarily made Kyoto mandatory as well, right? There was a 55% threshold, so all the signatories to Kyoto had a mandatory obligation, and they ignored that as well.
We'll talk about that afterwards. Kyoto was voluntary. It was a protocol. Paris is an agreement. 180-something countries basically agreed that that's going to happen. So there is some enforcement.
Let's just play out the thought exercise. Paris is mandatory. It's going to lead to great things. The question is, what are you investing in, right? And so maybe you're investing in some project in Brazil. So here's the short way to put it. If you're an originator of carbon credits, bringing forward projects that actually sequester or prevent carbon emissions, and you actually presume that the provenance of what you're doing is good, then yes, there's a real market here. I think the real question that I'm raising is, like, are there real projects to invest in that are actually mitigating or abating carbon? That's the ultimate question.
Well, there's Vera and Sarah and Gold Standard. We only do the top level of Gold Standard to basically get onto our exchange, and then we retire them and spit on an NFT so you can show your government that you complied. we also announced at CES that, because we're again a permissioned exchange on Ethereum, so it can never go onto Uniswap, it can never go onto Coinbase. It's basically like a roach motel. You basically get verified, spits out a mint and burn token like Tether, so it's unlimited supply because it's not about scarcity. It's about it mints when you prove that you've met the UN certification qualifications, and then it gets burned when you retire it. So you can either burn it and then you meet your qualifications. You can bank it so you can then burn it later and retire it rather, because there have been a lot of problems with greenwashing of double retirement, double counting, etc. This on a transparent blockchain shows the provenance, so it hasn't been double created, shows the burning, so it hasn't been double retired. You can resell it on the exchange, and the final thing we announced at CES was we now have a patent and have a product that's going to be coming out shortly that allows you, because carbon is unregulated, to actually use it as an NFT for remittances and for cross-border payments.
That's cool.
I'd like to talk to you guys about
Sure.
What's everybody think about the metaverse? Being, say a parent, I don't want my kid to spend all their time in the metaverse. They're already doing gaming and this, that, and the other thing. How do you respond to that?
I think that play to earn is going to revolutionize a lot of lower wage work. So I think that people who maybe make minimum wage now might be able to make a lot more at scale in the United States. So not just in the Philippines and not just in developing countries, as it were. And so I think it's here to stay. I'm very excited to see how it evolves, and have personally done tons of research and made investments into Metaverse. And we actually recently invested into Moxie.io. Nolan Bushnell, the founder of Atari, he started a decentralized gaming studio, and his first game, that is Play to Earn, has 300,000 gamers out of Southeast Asia. So I think we're going to see continual exponential growth, and I'm excited.
Yeah, that's a great question. I mean, I went into gaming because I came at it from a augmented reality perspective, and so I was like, wow, we have a technology here that we could gamify the regeneration of nature. But we had to figure out a way of connecting the digital world and the real world. And so we used augmented reality technology, which augmented reality just means there's a digital layer. So through your phone, you can see a digital layer over the real world. And we were using a game that allowed kids to reimagine urban areas and greenify them so they could plant virtual gardens in the real world, but using augmented reality. The technology just wasn't there yet, and NFTs weren't. I wrote an article in Forbes a couple of years ago with about Play to Earn and NFTs, and how there was using augmented reality technology, there was a way that we could gamify the regeneration of nature. So that game was designed a few years ago. The technology just wasn't available, and NFTs weren't a thing then. But now, Google Glasses, Apple are coming out with their glasses. NFTs now are a thing. So I think there's a confluence of technologies that will allow gaming to merge with the real world. And so how do we, and my studio is mission driven, so we're thinking very, very carefully about that impact on the real world and getting kids into the real world. Now, we've got a roadmap to do that. It's not going to be on day one, but we do have this journey that we're going to take the gamers on. And if you can do real world play to impact and earn revenue through that, then I think there's a real opportunity to tap into the billions of gamers and have them do these little micro actions that have real world positive impact. So I think the confluence of technologies is coming together to allow games and the real world to merge. And so that's kind of what we're developing on our roadmap.
The one thing I'll say is if you're sitting there and you don't understand the metaverse, don't feel bad. I've been operating in digital assets for 8 years. I have no clue about this metaverse thing. The second thing is, that said, I think it is going to be a thing, right? If we were sitting here 25 years ago, we couldn't imagine the internet on our phone like we have it today, right? So, and it builds on what Alfie was just saying. These technologies will be amalgamated in some way, hopefully positive way, that we can't even imagine over the next 10 or 20 years. So I look forward to having a front row seat.
Well, I think it's all about building communities too. And so, since I am not a very competitive person, and to build communities, I think that Kara and Dylan had mentioned that they're going to be giving away an NFT. And because I'm not a competitive person, I asked them to print out this. So, because I didn't even know how to even put my name in to win it. So, anyone that wants to be part of that community or wants to win an NFT, here's how you do it. So,
Thank you.
I'll just say something. You had mentioned what we tell our kids. I will say our oldest son was the captain of his baseball team in high school. He's now a sophomore, and last year he was the captain of his esports team at university. So I think we were talking to someone at dinner last night, and you know, in high school he would sit in his room and like, what is he doing? I'm hearing all these noises. But we found that he has built such an amazing community in esports. I don't even know the game he plays, but in esports, it's really amazing. And then our daughter is developing our high school daughter is developing a project in upcycled fashion on the Metaverse. So it's really just interesting stuff. And these kids are just light years, and they understand what the impact of all this stuff is.
I was just going to answer on the metaverse. It's just it sort of allows somebody, if they have I mean, everybody has hobbies, right? But now all of a sudden, if you have a hobby of gaming, you can actually all of a sudden emerge from your bedroom and say, "Hey, Mom, I made more than you did last year."
Yeah, sure. So this question is for Chris. Little pivot, just some insight about Bitcoin. So I'm a Bitcoin maximalist. I'm a big believer in Bitcoin, but sometimes I go deep in thought about possible doomsday scenarios. And I know most Bitcoiners don't want to like face that or think about it or just kind of ignore it. So I have three, and I wanted to get your kind of feedback about these scenarios. So one is Satoshi is alive. He's alive. He's kicking. He has 80 billion worth of Bitcoin, which is like 1.1 million. He can tank the market. He can manipulate it. We hope he's dead. We all hope he's dead, really. And all the Bitcoiners are like, Satoshi, you're dead. You're long gone. The second one is quantum technology, possibly breaking the blockchain, and how Bitcoin kind of solves that. And then the third is we talk about like decentralized technologies for Bitcoin or whatnot, but the trend I've been seeing as an analyst is that miners are slowly consolidating. And so in the near future, you're going to have one, two, or maybe less of big miners owning the network. So yeah, I just wanted to get your thoughts.
All great questions. So for those who don't know, Satoshi is the pseudonymous creator of Bitcoin, and of the 21 million Bitcoin that can ever exist, Satoshi controls 1 million if he, she, they, the organization is still in existence. Real risk there, you know, the first question, you know, what if Satoshi announces that he, she, they are with us and can potentially move the coins? Completely unknown in terms of what that means in terms of US dollar price action or fiat price action for Bitcoin. Could be good, could be bad. It's a risk, right? Remains unknown. It's like aliens visiting the US, right? Or the world. Like how would humanity react? We have no idea. The second was on quantum computing. The short way I think about quantum computing, yes, quantum computing could break SHA-256, which is the cryptography that protects Bitcoin. But if we have quantum computing breaking Bitcoin, like it's breaking everything in the world. Like nuclear reactors are not safe. Your money on the screen at JP Morgan just disappears. Like the world's got much bigger problems that whether Bitcoin exists or not. So I don't worry about that at all. Fair point. So maybe I'm oversimplifying it. It's a risk. It's definitely a risk with quantum computing. And then the third question was, or third issue. So with Bitcoin, we have all these computers, just to give people context, voluntarily throwing computing power at the network, right, which allows us to have this consensus mechanism with no entity, no government, no company controlling it. And it also allows digital money that's not copyable, right? Solve the double spend problem where you can't just invent the money. The way that works is if or one of the downsides is if somebody controls 51% of the computing power on the network, then they could actually double spend money or just do whatever they wanted to, right? And so that's a risk. And so people say, okay, all the mining started moving out of China last May. It's actually starting to largely consolidate here in the U.S. I've heard people float theories with the U.S. government nationalize all Bitcoin mining within the country if we had more than 51%, and then maybe the U.S. could actually launch a state-level attack against Bitcoin by controlling the mining here. Is it? I mean, just the pragmatic possibility of that happening is so low. I don't ascribe much value to that possibility as well. Could it something like that happen where we confiscated gold like we did in what was it, 1933 in theory, but then you would actually have to go to like Texas and Montana and upstate New York and all these places where people like to shoot things, and so is the U.S. government going to come take it by force? We'll see how that plays out. There's a lot of game theory there.
Yeah, I also want to make some comments on the quantum question because this came up last year, and so because I'm always an avid researcher, I actually found a quantum physicist out of UPenn and spoke with him about this possibility, and he explained that not in our lifetimes are there going to be computers that are going to be able to break Bitcoin. So, I could probably connect you with him if you'd like. I'm still friends with him. He's now become a big crypto investor, so yeah.
Yeah, and I think for the most part, you're right. If SHA-256 is broken, it breaks everything. The other thing also is that, I think what would happen before that is that it might end up like, finding some lost coins, but anybody who actually still has control of their own wallet can all of a sudden make it a lot tougher by having it a, multi-sig of 199 out of 401 level of security on top of that. So there probably will be things you can put on top of the core that would then make it more difficult to break. But again, not in our lifetime.
Are we entering a bear market? Is it going to be long? And does it matter for crypto and blockchain? What's everybody's opinions?
So the data suggests that we are not entering a bear market. We are in a dip, which there have been several so far this year. We've been in a sideways cycle most of the year between 30 and 60-ish thousand, and there is a fair amount of manipulation that happens from the whales who basically like to make more Bitcoin because the way they can just continue to spend like billionaires and never deplete their supply of Bitcoin by shaking out the newbies. And the fear and greed index, whenever it goes down to the bottom, is when there's maximum FUD, and the people who bought it 50,000 are like, oh my God, it's going to zero. I better sell now at 30. And then the whales are buying it, and because of the amount of things that you can do with wiping out people with leverage. I mean, some OG that got it at a nickel. It's pretty simple for them. I mean, simple because I've done it a few times. To simply go in and you can track whale wallets where they'll move in a bunch of Bitcoin into a single exchange because they're all kind of connected now. Where if one drops 10%, everybody's going to drop 10%. So they'll go in and have a whole bunch of shorts, and they'll go intentionally through their own massive power on one exchange, dump the price by 10,000. Everybody dumps. They collect all the money that they have on the short, and then they end up buying it up at the bottom, and wash and repeat every couple of months. And and then a lot of times they'll then throw out a lot of FUD saying, oh, this is because of this is because of that. No, it's because there was a couple of whales that did this. And as the network gets bigger, it gets harder to do. I will say that if you want to go and follow a couple of whale watch reports, and when you see a large amount of Bitcoin or ETH moving in, it typically means a dump is coming. When you see a large amount of Tether coming in, it usually means that someone's planning to make a big buy. Then maybe they're going to dump one last time and then buy. $1 billion of Tether got moved into a single exchange yesterday. So that shows that somebody's planning on making a $1 billion buy. So I'll just leave it at that.
It wasn't me. I think, for me, to my husband's dismay, who's a former FX derivatives trader, I just continue to slowly accumulate, hold it, so it doesn't matter to me whether it goes up or down.
Yeah. So Michael, that's a great point. Also, Bitcoin does drop when it gets banned by, say, China. So that was a huge predicator of that last year. But so yeah, right, right. I will say I actually do think we are entering a bear market, but I think that it's going to be one of the shortest bear markets ever. I think it'll literally just be a 6-month blip where everything tanks, and then we're going to have this renaissance in the summer again. It's going to be like, I think it's going to be DeFi summer 3.0. I think if it's longer, it might be 12 months, but there's so much more capital than there's ever been that, you know.
As I think I said before, the data shows that typically it should be a 24-month cycle, which means, and again, we may not get that much higher than the previous high of 67,000 this cycle. The data would suggest we should get to 85,000, which is 10x what the last halving was over 24 months. So, it was pretty. I mean, it was as Mark Twain said. History doesn't always repeat, but it tends to rhyme. And so we've been going down like one Bollinger Band every cycle, and we've been extending it with diminishing returns. So basically, you had 100x in 12 months for the first halving. You then had 30x in 18 months. So it would suggest that the trend continues is going to be 10x over 24 months. 24 months means that we would have the all-time high roughly around May. And it doesn't have to be, 300,000. It's probably going to be somewhere around 80 to 90,000. Potentially get a little retail FOMO finally, which is we had some retail FOMO in just on Google searches in April. We've got none right now, but if all of a sudden it goes from, if it goes down to say 30 right now or 29 and then pops up to 50 and then pops to 80, that's when retail gets in and says, oh my God, it's going to 300. I better buy at 80. And that's when the whales start, you can see they start selling and they buy back, a year and a half later.
Yeah, I was just gonna say follow Glassnode. Follow Glassnode on YouTube and Twitter, and you'll see all they share all the data like in a 20-minute YouTube session. Well, Pantera did just that. They said it was going to be 115,000 this past July, and it didn't happen.
I think there's a lot of relevant data that is not 100% correct, but shows and verifies trends. And Glassnode and CryptoQuant have a wealth of data, and you basically analyze the data just like in the stock market. There's a divergence of opinion. And that data, sorry. So just give me 4 or 5 data points. Is it wallets, number of wallets? Just what are those data points that you?
It's money moving on and off exchange, right? Whether with Tether, which is just a U.S. dollar derivative, or the actual crypto itself, Bitcoin, ETH, whatnot, right? It's the amount of time that certain large wallets have had their assets dormant, right, on exchange, which you can see, right, and you start to see these bands and these waves. It's almost like the digital equivalent of looking at like 200-day moving averages and starting to layer all this together. So Glassnode's a great resource for that. Just one quick additional frame. I mean, I think it's useful to keep some perspective here. Even after this pullback, Bitcoin is $700 billion, 0.7 trillion, right? The total digital asset market as of this moment is about 1.7 trillion. Apple stock, even after the pullback last week, is 2.7 trillion. Apple stock is still unto itself almost double the size of the market. The insight is it's still, to be blunt about it, it's still kind of like a shitty little retail market. We're only starting to get like dribs and drabs of institutional money, And I think we're still in a bull market. I agree with Michael's assessment. We're probably halfway through this bull market, and over the next 6 to 12 months, we'll start to see the peak, right? But I'm expecting in relatively short order, we might be in a permanent bull market as we start to get real institutional flows and go from something that's order of magnitude 1 trillion to 10 trillion, and then probably something that's order of magnitude 10 trillion to 100 trillion, right? And so these movements from 60 to 30 are going to look like blips, in a very short period of time. Well, I think Michael put it well. Like it just becomes much more difficult, and it's like a spring and a suspension of a car. And as you get a much more bigger vehicle, it just becomes much less volatile. So, no.
Yeah, well, something I want to also bring up is that what people don't realize is that the vast majority of Bitcoin is always held. It's never traded. Something like 80 to 90% is just held, right? Because people are hodling. They think it'll go up. So, and that's actually one of the reasons why there's so many other like blockchains. Like Ethereum is mostly used for decentralized finance, and people transact with it all the time. Whereas people who have Bitcoin don't necessarily want to transact with it. They're very greedy about it. It's seen as this gold standard almost, no pun intended. So I really like when he's saying whales manipulate the market, it's because they're one of few parties that like actually do come in and out.
The long-term trend is the growth of users, and it's been following the internet growth. Vitalik's dad, Dmitry Buterin, posted a chart about a month ago that showed the growth of the internet versus the growth of Bitcoin. Other than at the very beginning when you went from one user up to like a couple of hundred users, it's literally been like within 1 or 2% month by month, year by year. We're right now at the end of 1997. We're at 320 million users. That's about where the internet was. Today, the internet is about 4 billion. So that would then imply that in 25 years, you're going to be maybe even a little quicker, but in 25 years, you'd be at 4 billion users that have at least some Bitcoin. And the fact that, there's only 18.8 or whatever million Bitcoin, supply and demand, even though you have cycles in between, if every millionaire in the United States wanted to own one Bitcoin, they couldn't. And, forget about even the rest of the world. So that as you go from 300 million people having some Bitcoin to 600 million to 1 billion, I think 1 billion is really the tipping point. And that should probably be within the next 3 years.
Yeah, and Glassnode and other resources will take you through. Like, it's getting more diverse over time, right? You've got people in El Salvador now who never had a bank account buying small fractions. And you've got people all around the world. Turkish lira is tanking, right? I got many friends in Turkey who a year ago would laugh at me about Bitcoin, even though I had been evangelizing the 7 years trailing. Right now, they're like, "Holy moly, maybe I should put some money in Bitcoin." So, this is just building on Michael's point. We're going from several hundred million users to several billion users, and you're not going to time the market. Yes, it's highly manipulated. It's the most reflexive market, both on the upside and downside, that we've ever seen in the world and probably will ever see, because it's a truly traded market. But hold for the long term. If you take any reasonable time horizon, 5 years or more, you're probably going to make a lot of money.
There's never been a 4-year period where when you bought Bitcoin and you wouldn't be up 4 years later. There's never been a single 4-year period.
Definition of a whale is 1,000 Bitcoin?
Depends. It's in the eye of the beholder. I think most people consider a whale to be 1,000 Bitcoin.
How many 4-year periods are you using for that?
Like 4 years ago today, Bitcoin was the lower price.
I know I get what you're describing. I'm asking, when did you start the clock for the 4 years?
Well, the first Bitcoin blocked was January 3rd, 2009.
So my belief is, I think that if we do have a crypto winter, it's going to be shorter. Why is that? Because there's so much pent up demand by this whole sea of institutional investors that are going to be coming in. I was just on the phone with an endowment last week, and this one guy who's the crypto guy for the endowment said he's getting 45 headhunting calls a week begging him to go to another endowment because like all the endowments feel like they're behind the eight ball. There's so many institutions feel like they're behind the eight ball. So I agree with what Dylan's statement was, is that the demand, I mean, it's just coming now, that tipping point of institutional money coming in. It was so wonderful for family offices, you know, like rarely does a family office have a competitive advantage. In this space, we had a competitive advantage because with all the regulatory issues, the institutional investors were afraid to come in. And so it was at this, you know, this space that it paid to be a family office. But now, I mean, just talking about this year, it's the waves coming now.
One thing that's a really unknown factor is the fact that because of the elongating cycles, again, 12 months, 18 months, 24 months perhaps, once you go to 30 months, you still are at roughly a little bit under 4 years. In fact, it's been less and less each time. So the next halving cycle, you're going to have a period where you have two halvings potentially within one cycle, and nobody knows what that's going to mean. So everybody has a personal strategy. I typically look at, yes, I typically, when I look at certain factors, it's not necessarily on the actual dollar value. It's where it is in the cycle. And if it's at the kind of, if it's at the top of the risk reward cycle, yes, I'll sell quite a bit of it and then keep it there in kind of DeFi and then wait until the bottom. So you make a lot more. You don't. I mean, I'm not a day trader, but you make a lot more if you're looking back in time and you ended up, selling at or near the all-time high. I certainly sold a lot in December, January timeframe of 2017-18, and then you bought back again in January of 19 when it was 3,500, which I did quite a bit that month. You then, sell in the 60s, and, you have to just look and see where you are. Honestly, at the fear and greed cycle, which is tracked on Twitter, when everybody's greedy is when you want to be selling, when everybody's fearful is when you want to be buying. And I believe that goes all the way back to a statement by Warren Buffett.
I also want to point out that the big macro guys in the space, like Dan Moorhead of Pantera, the general consensus is that no one's selling until maybe 300,000. Like 10T founder Dan Tapiero, who's a big macro guy, said this. And yes, right. They're both in Puerto Rico now. That's the general feeling. But like a lot of people will never sell ever. Like most of my friends who are whales believe that like they'll go to El Salvador, they'll go to countries and like transact in 20 years and.
And I certainly know people who've been buying since 2013 who basically were wealthy from other industries and literally said, yeah, I haven't sold a single Bitcoin because it's there for my grandkids. Hodlers, yes.
Can you talk about the regulatory environment? What I want to do is let everybody have a chance to mingle as well. We have to, otherwise we're going to not make the Miami in time, and so we have to transition.
What I want to say is really, we have here in this room such an incredible bunch of people, not just the panelists, but the audience as well. And what we wanted to do is build in just at least 15 minutes for you all to mingle and actually get a chance to go up to the panelists and share your viewpoints, and for the panelists to also get to know each of you as you wish. So please take some time to do that.
Come join our 361 Firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.